Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we're diving into some very interesting news from a big name in the gaming and betting world that just dropped a report. Alright folks, we're looking at a report from Flutter Entertainment PLC. Now what's the big news here? Basically the company is gearing up to raise a significant chunk of money, and they're doing it in a few different ways. Think of it like this: they need more cash for their operations or maybe for future plans, and they're getting it by offering new kinds of financial promises, essentially borrowing money but in a slightly more complex way. Flutter is a giant in the online betting and gambling industry. You might know them from brands like FanDuel in the US or Paddy Power and Betfair elsewhere. They're all about sports betting, gaming, and providing entertainment to millions of customers worldwide. They've grown a lot, often through smart acquisitions, and are constantly looking for ways to finance that growth and stay ahead of the competition. So what exactly are they doing? Flutter's subsidiary is launching an offering of what they call senior secured notes. Let's break that down. Notes are basically loans, and when you see senior in there, it means these loans are among the first to be paid back if the company ever runs into serious trouble. Secured means they put up specific assets as collateral to assure lenders that they'll get their money back. They're issuing these notes in 3 different currencies: US dollars, euros, and Great British pounds, all maturing in 2031. That means the company promises to pay back the borrowed money plus interest by that year. On top of that, they're also looking to get more money through something called their Term Loan B facility, which is essentially another type of loan, and the total amount they're aiming to raise is quite substantial: $1.755 billion. That's a lot of money, and it tells us they have big plans or significant financial needs right now. This isn't just pocket change. This is funding that could be used for major investments, acquisitions, or refinancing existing debt. It's a clear signal that Flutter is actively managing its financial structure to support its growth strategy. This information comes from a press release they put out on July 23rd. Think of this press release as their official announcement to the world about these financing plans. The good news for us is that they've attached this press release as an exhibit to this filing. Now, this is important. They aren't selling these notes to just anyone. They're offering them to very specific buyers. Qualified institutional buyers are typically large financial institutions like pension funds or investment funds that have a lot of money and experience in these kinds of deals. Outside the US, they're primarily selling to non-US investors. This tells us they're using established financial channels to raise capital efficiently and in compliance with regulations. It's not a public sale to individual investors. It's a more concentrated fundraising effort. Remember, at its core, Flutter is a publicly traded company. Their main financial product that you might buy as an investor are their ordinary shares. These are the pieces of ownership in the company. Currently, the shares are traded on the New York Stock Exchange under the ticker symbol FLUT. This means any investor can buy or sell these shares on the open market. So why is a company like Flutter raising so much money? It's likely to fuel their expansion efforts. They're a global player, and expanding into new markets or investing heavily in existing ones requires significant capital. For example, they might be looking to acquire another gaming company, deepen their presence in the US market where FanDuel is very strong, or develop new technologies for their platforms. They've also been active in the market with significant acquisitions in the past, so this could be to fund more of that strategy. Now let's talk about the bigger picture of Flutter's financial health. While this specific report is focused on a financing event, not a full quarterly earnings report, it's always good to have context. Companies like Flutter typically operate with significant revenue streams from their betting and gaming activities. They need to manage that revenue carefully, paying out winnings to customers while also covering operational costs, marketing expenses, technology development, and of course servicing their debt. Success in this industry depends on attracting and retaining customers, often through competitive odds and engaging user experiences. It's important to remember that the gaming industry is highly regulated and competitive. Flutter operates in many different countries, each with its own set of rules and market dynamics. This means they have to be agile and adapt their strategies constantly. The company's ability to generate consistent cash flow is key to their ability to repay these new notes and continue funding their growth. Looking at that overall business strategy, diversification is usually a strong point for companies like Flutter. They don't often put all their eggs in one basket. By having multiple brands and operating in various markets, they can weather economic downturns or regulatory changes in specific regions more effectively. The fact that they're raising funds indicates confidence in their future prospects and their ability to generate returns that will satisfy their lenders and shareholders alike. Now for my take on this. Flutter Entertainment is a powerhouse in the gaming industry. Their ability to secure such a large financing package demonstrates their strong creditworthiness and the market's confidence in their business model. Raising $1.755 billion is a bold move that signals a clear intent to grow, expand, or perhaps deleverage their balance sheet by refinancing at potentially more favorable terms. The real question for investors is how will this new debt be used to generate a return that's greater than the cost of borrowing? If they can successfully deploy this capital into high growth areas or make strategic acquisitions that promise strong future earnings, then these notes will be a smart financial move. However, any company taking on significant debt also increases its financial risk. If revenue doesn't grow as expected, or if there are unforeseen challenges in the market, servicing this new debt could become a burden. A key risk is always the regulatory landscape. Gaming is under constant scrutiny, and changes in laws or tax rates in major markets can impact profitability. Competition is also fierce, with new players and technologies constantly emerging. Flutter's success hinges on its ability to maintain its smart strategic decisions. Overall, this financing announcement suggests Flutter is positioning itself for further growth and is proactively managing its capital structure to achieve its objectives. It's a sign of ambition, but also a reminder of the financial discipline required to manage a large, globally operating business. We'll be watching closely to see how this capital is deployed and what impact it has on their future performance. Alright, that's our breakdown of Flutter Entertainment's latest announcement. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.